all things must come to an end, and apparently that even goes for temporary emergency programs. Well, that's good to hear. So, Bank of Canada lays out plans for quantitative easing. So, really, what we're looking at is a withdrawal from the emergency program. So, the Bank of Canada provided the greatest guidance yet into how it plans to slow purchases, eventually end purchases of government bonds as the economic recovery accelerates, fueling expectations it could begin doing so as soon as April. In a speech on Tuesday, Deputy Governor Tony Gravel said that the central bank was winding down emergency liquidity programs it deployed to grease markets with when the coronavirus hit last year, including programs to buy provincial and corporate debt. He also provided insight into how the central bank plans to pare back its main government bond purchasing program, including a pledge that any tapering will be gradual. Policymakers have been buying a minimum of $4 billion in federal government bonds each week to help keep borrowing costs low. Economists say that pace may no longer be warranted, with an outlook that appears to show the economy growing at a much stronger clip than officials had been expecting. Isn't that wonderful? We're getting back on track faster than expected. And I think a lot of people are wondering, how exactly does this affect me and my pocket and my family, right? If will this lead potentially to an increase in rates, and if rates go up, will that slow the market down? Most likely not. Most likely it won't have much of an impact on the market. I mean, a lot of people weren't put it this way, the people that were planning to buy, a lot of people that were planning to buy, it doesn't look like they were that affected by the shutdowns, or their finances weren't put into disarray because of the new economic climate that was created by the shutdowns, really, by the pandemic response, put it that way. So because a lot of people weren't affected by this pan by the pan, can't speak by the pandemic response, what ends up happening is you have people that can still purchase a home. Their purchasing power never was affected. And you also have people with high purchasing power, or a lot of purchasing power, that no longer are required to be in these urban centers, right? Like Toronto. So now they're able to move out of Toronto. Maybe they were renting, and they say to themselves, well, if I don't have to be in Toronto, I'd like to have a backyard. Maybe I can just go to Burlington. Maybe I can go to Hamilton. Maybe I can go to Barrie. So many places now available for you because you no longer have to be within 30, 40 minutes to your downtown location, right? Maybe you just didn't want to because you're in Toronto. Really, are you driving, right? If you're in the downtown core. So now you can go to a suburb and it doesn't really matter too much because you're not worried about your commute because you get to have work from home. Changes everything, right? Where you can work from changes everything. All these very high paying downtown jobs, you can still have that access to those jobs, but now you no longer have to be within that vicinity. So now you can be a little bit further where you can own something, and that's really it. The downside to that now is you have a lot of people flooding into those areas, and they're bidding them up, right? So all of a sudden, they're using the purchasing power that they had in Toronto to now applying that to outside markets, which is why you get these strange cases. And then you also don't have a massive increase in the supply of single family homes to these areas. So you end up in this situation where you have a sudden increase in buyers with purchasing power into markets where the valuations were maybe half of what it was in Toronto, maybe a little bit more than that, 60%. and that's where you end up with all this craziness, right? So, or there were maybe not even 60%, they could be higher, but the idea is that it's not at the same level as Toronto, right? So now they have the ability to work outside, live outside of these areas, and enjoy their lives. But that comes with a consequence to those areas. Now you have people that they have good incomes, but they are no longer able to purchase in the areas that they live in, which was already outside of Toronto, maybe even outside of the outside of the Toronto integrated Toronto area. But now they have to look outside of that area in order to get a place they can afford. Because rule of thumb is really, four times your gross household income, right? Four times your household income is usually around the mortgage you can afford, or it's a quick way of kind of getting an idea of how much of a mortgage you can afford. And so if you don't have a large down payment, how can you afford to get into one of these homes where, in Barrie alone, in 3 months, we saw the average price of a house jump 100,000, a single family detached, jump $100,000. I mean, if keeping everything that I'm saying to be true, that means you would have to have an increase in your purchasing power by, you have to increase your income by about 20 to 25,000, right? If you were on the borderline of affording that home. So how does that happen in 3 months, right? So the answer is it doesn't. It doesn't. That means you have to, you wouldn't have the you wouldn't have that increase. Because of that, you would need to come up with the additional money. That's it. That's the only other option. And how many people have that kind of money just laying around? Most Canadians don't, not just for a home purchase. So I think that's why it's created a bit of a crisis. So we'll see what happens with the rates. I mean, how high do the rates have to go to actually slow down the market? Well, if we're taking a look at what people can qualify for, right? Because we still have to use a qualifying rate to determine what they're able to get prior to them actually getting approved and then feeling the effects of a lower mortgage rate, right? So the qualifying rate went down a little bit, but I mean that didn't necessarily increase the purchasing power to the point where it makes sense to see a home average home price in a city jump $100,000 in 3 months. I mean, great opportunity to flip homes. I mean, I don't think there was ever a more perfect market to do that. And I don't know when you don't want to be caught swimming naked when the tide goes out, but um, uh, yeah, but I mean, like, I'm sure a lot of people made a lot of money during this period, as people do in every period. So, anyways, that's basically it. So we're looking at going forward. We're looking at seeing this tapering. So we should be expecting to see rates changing, rates going up, and they're trying to do it in a way that's gradual. So we'll see what happens there. Now, this will affect your fixed rates, and but not your variable rate shouldn't be affected until they make a decision on what they want to do with the bank rate, right? So um, the overnight lending rate. What am I doing here? They're saying they want to keep it at Bank Canada's overnight policy interest rate. They're looking at keeping it at 0.25%. So it looks like they're trying to hold when it comes to the rate decisions. And but with regards to the QE program, it looks like they're going to be paring back on that going forward. So that's it. I don't think there's really a way to adjust your sails because when I mean sales as in on your boat, because at the end of the day, if you had the opportunity to make more money, you probably would have. If you had the opportunity to have a large down payment, you probably would have. But yeah, I mean, I think what we're going to start to see though is a lot more developments coming online. there's justification for it, especially in a lot of these areas. Obviously, there's a lot of demand, so we might see a. I mean, hopefully we're going to see a flattening of prices. I know there's a lot of concern right now, especially coming out of from the CMHC regarding overheated markets in certain cities like Toronto, Hamilton. Um, uh, Oh, anyways, Toronto, Hamilton, those were the big ones that really stood out to me, and a couple other places that they added to it. Oh, Moncton. There's a few couple others as well, but that's all for this video. It really wasn't much. I mean, there's more to read. You can check out the article, but I don't think there's really much more to glean from it than that. So you have yourself a wonderful day. Like, share, and subscribe if you thought it was any sort of useful information or discussion to have, and yeah, leave a comment because I'm always curious what other people are thinking. So please have yourself a wonderful day.